Good morning, it's Friday. Welcome to Fintech Friday on this, the 15th of May. I'm Mark Johnston, Event Director for Next in Tech and producers of Fintech Friday. Today's discussion deep dives into the world of open banking and APIs. Just a short word though on general housekeeping from us. Please ask our panel members questions using the Q&A button at the bottom of your screen. You can also upvote your fellow participants' questions there, should you wish. Use the chat function below to make contact with your fellow audience members, make comments, and spark debate. At Fintech Friday, we encourage debate and the sharing of ideas, but please respect this as a professional forum at all times. Okay, let's get started. Your chair for the session is Ayana Vidal of Innovate Finance. Good morning and over to you, Ayana.
Thank you, Mark. Hello everyone and welcome to our Fintech Fridays webinar. I'm delighted to be joined by some really great speakers today so we can discuss all things open banking. I'll ask them to introduce themselves and talk a bit more about their interest in the topic in a little while, but I'll introduce them all first of all so you can see them. We have Chris Hyam, Head of Strategy and Change Payments at Virgin Money, Hugo Rousseau, Programme Manager Financial Services at Tech UK, Hugh McCullen, former Portfolio Director Open Banking at HSBC, and Shubhanga Prasad, Director of Strategy at Oak North Bank. To start, I'll introduce myself a little bit. I'm Head of Policy and Government Affairs at Innovate Finance, and Innovate Finance, for those of you who don't know, is the industry body representing the fintech sector and innovation in financial services in the UK. Chris, perhaps I'll go to you to introduce yourself first.
Yeah, thanks. So I look after open banking at Virgin Money and the wider Clydesdale PSD2 we're now starting to move from that regulations right and with all that new infrastructure we've built and all of the new capabilities that we now have available.
Chris, I'm so sorry, I'm going to have to ask you to say that again because I think you broke up. So I'll give you a couple of minutes to just go over that because it's important that we hear.
Yeah, sorry, my internet's not doing very well. So I'm Chris Hyam. I look after open banking at Virgin Money and the wider Clydesdale group. And I was on the PSD2 program for the past 2 years with a painful experience. And like many organisations now, we're taking what we've done, all of the capabilities that we built, and now thinking about how we start to leverage those to the benefit of our customers going forward.
Thank you, Chris. Now I will go to Hugo.
So I'm Hugo Rousseau. I'm Program Manager of Tech UK's Financial Services Program. Very briefly, Tech UK is a membership body that brings together people, companies, and organizations to realize the positive outcomes of what digital technology can achieve. In this crucial time, digital technology is really key in financial services, but across different sectors. And as part of the financial services program, I've worked with our members from tech sector and financial services sector, working with regulators, government, and key stakeholders on topics including digital banking, payments, financial inclusion, blockchain, and obviously the topic of today, open banking, and working with the FCA on a topic we cover a bit, which is open finance. We put together a lot of events and paper with our members. I'm looking forward to this discussion today.
Thank you, Hugo. Now I'll go to Hugh McCullen.
Thanks, Diana. Yeah, Hugh, I'm Managing Director of a small partnership called Fincherno, where we've been engaged in a number of portfolios, one of which most recently was I spent 14 months as Portfolio Director in Transformation for HSBC. My responsibility being business and corporate implementation of open banking for CMA and for PSD2. So I think that possibly will be more of my focus than consumer side, but some experiences that I think will probably match what Chris and Subhanga will say.
Thanks, Hugh. And now I'll go to Subhanga.
Thank you, Ayana. This is Shubhanga Prasad, new to UK regulations, but spent bulk of my decade in India and joined OpenEarth about 8 months ago. Predominantly take care of strategy and product from a technology point of view here at OpenEarth Bank. And it's been a very interesting space simply because the focus is really on SME lending and how we've been kind of utilizing open banking already to solve some of our monitoring and underwriting, use cases. So I'm looking forward to hearing the co-panelists' views and, of course, hopefully adding value to this forum. Thank you.
Thank you all. So I've seen a few questions coming in already, and I would remind everyone to keep sending them into the Q&A function, and we'll hopefully get through as many as we can. I'm going to kick off with my own question, if I may, as chair. And I'm going to start by asking the panel what API success stories we've seen in the last few years, just to give us a bit of a review of open banking so far. And perhaps Hugo, I'll go to you to give us the answer to that question.
Yep, thank you, Anna. I'm really delighted to kick off. I'll give more like a short sort of overview of the API success story. Also focusing in the UK. We've seen the development of a lot of API following PSD2 on the CMA order, on a lot of TPPs being created and regulated by the FCA. I think as of today, there are about 224 regulated companies by the FCA that plug into the APIs that have been developed. As of January, I think the OBIE say there was about 1 million customers using open banking with about 220 million monthly API calls. So I think there have been a lot of developments on great use of API that have been serving many new customers, SMEs and consumers. On some example, we've seen around debt advisor using open banking to assess the client's finances, or dashboards using payment initiation services to allow customers to move money between different bank providers, or credit reference agencies using transaction data to help consumers and businesses within credit files access to finance. So I think there've been a lot of developments of really great API, and there've been more and more connections through the API from a lot of TPPs to banks and serving ultimately consumers. So I think in the last 2 years, we've seen a lot of development, and obviously there've been a slow takeoff because there've been a lot of effort putting into this, because we can't just come from one framework and systems to now have a lot of API and standards and framework on new TPPs. So it takes time to develop secure standards, but in the last 2 years, there's been great development, and we're seeing now many more use cases of companies and TPPs using APIs and ultimately consumers using open banking and APIs. So I think overall we've seen a lot of great success stories of API, and I do believe API as the future of financial services and other services in the coming years.
Thank you, Hugo. That was a really good overview. So we've had a question come in from Matt W. Interesting, given what you just said, Hugo. Is open banking a vanity project? And perhaps, Chris, I might come to you for an answer on that one.
Yeah. Can you hear me okay this time? Before I start talking. So it's an interesting question. So I think there's two ways to approach this, right? So I think that it's not a vanity project as a piece of regulation. As a piece of regulation, it's an important push for banks to open up data, and I don't think without it, banks would have opened up the data and made it as ubiquitous as it is. However, I think that it is very easy as banks, in particular, I think we've been more at fault of it than fintechs more widely, to launch some open banking capabilities just for the sake of it. So, starting to introduce capabilities in apps to aggregate into your banking app so that you can effectively say, we have done open banking, fantastic, job done, tick, I think is something that I'm seeing in the market. And I'm not convinced that there's consumer value off the back of that. So whereas forming partnerships with an accountancy package provider, for example, to provide additional data and value to customers, to your business customers, is something that's clearly not a vanity project and something that customers really want. So I think it can be, and it has been, but it depends how you approach it.
Thank you, Chris. We've had a question from John Heaton Armstrong. What are your thoughts on the indications from the FCA that open finance will have to be a market-driven initiative? Shubhanga, I wonder if I might go to you to that one, thinking about what Oak North is working on.
So I think I must kind of admit I'm not as deep into the open finance space yet, but I think what is definitely of interest to corporate banks or SME lenders such as ourselves is how we can actually kind of utilize the open banking APIs to kind of practically get bank statement / cash related information. And on the other hand, I think Chris just mentioned about integrations with some of the accounting service providers and how financial statements can potentially kind of come there. And the way I kind of look at it, there are two views to it. One is, there's a lot of productivity kind of improvements. You can actually kind of bring in both from the finance manager who's sitting in any of our corporate, in any of our big SME corporates, and of course also the credit underwriters and the portfolio managers in banks. So there is a lot of productivity improvements. And number two, of course, is and this is much bigger, is really the transparency of where your data is actually kind of going, and then having that ability to kind of ensure that you can have more control over what is going and where it is going. I think those are two of the biggest kind of advantages that I can think of from an open banking plus account aggregator's point of view.
Thank you, Shubhanga. We've had an interesting question from Vikas, who says, is open banking the death knell for traditional retail banks with the likes of Google and Amazon, etc., moving in? Hugh, perhaps if I can ask you to take that one.
That's a huge question. I'll answer it in a number of ways. One is, I think from open banking per se is the logical extension of what is happening within the banks themselves. So using HSBC as an example, they spent the last 5 years in-house essentially creating a microservice environment to distribute their own services across multiple channels. Open banking is both regulatory driven and market driven. So we're going to effectively see an awful lot more integration with fintechs that provide a point of service, rather than your monolithic bank owning the distribution channels as well as the products. You actually have potential to say, let's collaborate rather than compete and create a much better distribution network, which allows the banks to provide a service and fintechs or other parties to effectively provide services that fit into the orchestration of that service. When it comes to the Googles and I suppose AWSs of the world, it's a harder call. Just my own personal background, I worked in IBM for 10 years where we were always asked, you've all the software, you've got all the Z series, why don't you set up an IBM bank? And the answer was always the same. Our biggest customers are the banks. So if you're Google or AWS, you're probably providing a lot more of the componentry. Well, I know you're providing a lot more of the componentry. I mean, both Google Cloud and AWS are fundamental to HSBC's transformation. So rather than compete, why not in that world essentially add the components that form the underpinning of the infrastructure that allows the orchestration of the services that I previously mentioned. That's a very long-winded way of saying traditional retail is probably on the way out, but that doesn't mean that banks in and of themselves are on the way out.
some sweet relief there for banks. So I'm going to go to a question now from Caroline Tonkin, who's asked, where do you see the best use cases for AI in open banking? And what I'm going to do is I'm going to wrap in another question from Karen Elliott, because I think it's related. We know that there are banks who are looking at ethical AI and sort of trying to understand how we build in measures to make sure that algorithms impact life-changing decisions for consumers in a way that is ethical and that is positive. Hugo, perhaps if I can go to you for that one.
Yeah, absolutely. I mean, I think because open banking, right, is about data sharing. And it's putting consumers in better control of their data and ultimately about their financial situation. And data and sharing data is no use if we can't sort it and analyze it and give it back in a better way, which is accessible and providing new services. So AI and machine learning and automation, technology overall is a key part, a fundamental part of open data initiatives, because there's no point having open data if we don't have technologies that do something with this data. So I think AI and machine learning are critical to, and technology overall is critical to open data initiatives. Some use cases at the moment are on comparing different offers, so customers get the best deal that they can possibly can. And we're seeing AI advisor using a lot of data they can find on the market to provide the best option to customers. And obviously, developing technology, we've got to make sure we take at the core financial inclusion. So technology doesn't exclude people, because I think open banking and open data at its core is to bring more people in better control of their data. It's not to exclude people. It's to fundamentally is to make everyone aware of their financial situation and better control of their data. So it's really fundamental that we look at, we make the most of technology and we make sure we mitigate the risk that could happen in terms of exclusion on patterns. So it's really important, and we combine financial inclusion, digital ethics with the best use of technology in open data initiatives.
Thank you, Hugo. We've had an interesting question from Jamie McGregor. Do the panel think that with the current situation, the adoption of open finance will be sped up with the convenience and use? So, for example, thinking about credit checks and the KYC space, how will it help us to do better credit checks? Perhaps if I can go to you, Shubhanga, for that one. I might also bring Chris in as well, in your interest.
Absolutely, yeah. And I think it's definitely sped up. So let me kind of give you a live example of what we're kind of doing on the bank side, right? So up until COVID actually hit us, as part of the standard monitoring process of our loans, we used to kind of seek some sort of management information from all of our borrowers on a monthly basis. And we used to obviously kind of keep track of it, and things, had a certain trajectory. And with COVID hitting us and the economy kind of plummeting, I think what becomes equally important from a lender's point of view is to kind of monitor how the cash positions of all of your borrowers are, because that's really the kind of the crux of any business from the survival's point of view. And that's where actually open banking has helped. And in fact, we've successfully managed to kind of utilize some of the AISV services for us to actually start getting the cash balances of our borrowers, and on a daily basis, thanks to APIs. We don't have to necessarily kind of ask anything from them. They don't have to prepare anything. So and that's where consequently the productivity benefit both at the bank as well as the borrowers end. And I think consequent to that is really the willingness and the ability, right? So a lot of borrowers are willing to kind of provide access as long as they know what they're giving, and as long as they know what is it that the bank is ultimately seeing through this open banking channel. And I think that education is really the key for a lot of bigger banks to actually kind of take and handhold at least in the initial period, that what they're giving is not something that they have not given before, and now that they have better control over it.
Thank you, Shubhanga. And it ties in nicely with a question that's really popular about SMEs and suspicion of open banking and the Big Brother feel. Chris, perhaps if I might turn to you as well, just to give your perspective from the Virgin side.
Yeah, so I think there's going to be a few open banking elements that are going to become more interesting as we go forward in this space. I think we've talked about the credit checking piece a little bit already. What we don't know really is if we fast forward, in a year's time, 2 years' time, we don't know what the impact really of what's happening now will be on the traditional credit file that customers have. We know that lenders are being asked not to kind of put adverse markers on just now because customers have been in trouble. But equally, customers have dips in their income because they're furloughed and then they go back to where they are. Things are going to be different, and actually getting a better view as a lender of how a customer's behaved and how they've weathered this period is going to be quite interesting. And I think open banking gives you much more of an insight to that than traditional credit files do. I think the other thing that's interesting for me is around the kind of vulnerable customer and financial inclusion piece. So the services that are offered by kind of citizens advice and debt management charities and others are clearly going to see an increase over the next year or two because of the unemployment and the forthcoming recession. And actually, to avoid those services becoming frankly overwhelmed and getting customers to a better position, I believe that open banking has a key part to play, combined with AI and combined with all of the tools that the big PFM companies are building now, which are primarily now based on helping you wind back 6 months ago, helping you to spend less on your coffee and all of those kind of use cases we've all heard now and again. Actually, if we started to deploy those tools to think about how we help customers who've had a stable job all their lives and suddenly lost their job, and how they deal with their budgets, how they make things right going forward, and how we help them work with banks and lenders to get them into a better financial position. I think it's going to be an interesting one going forward, and I think it would be remiss of the charity sector not to start to really delve into what open banking can do for them.
Thank you, Chris. I'm going to try and look a bit further afield now, and I've got a question in from Orwin Adichio, who asks, what other laws and regulations, such as regulations around consumer and data protection and rights, are required as a prerequisite for countries wishing to implement open banking? And perhaps, Hugo, if I can go to you for a bit of an overview on this one.
Yeah, I'll give an overview because it is a complex issue, and we'll have to dive into regulatory issues like GDPR in Europe. But I think what's core and we need to understand in terms of open data initiatives is about data sharing compared to, for example, GDPR, which is about data portability. There's a big difference here in terms of how we protect the data. On the FCA in the call for input on open finance had some questions about the protection of data and what's necessary. And that GDPR, for example, in Europe is not necessarily the right way to go with because we're looking at open data initiative like open banking. We're looking at really sensitive data, which is really critical, and it's really important that we really protect this data and we put the consumers' rights at the core of initiatives. So what's really important is to understand it's data sharing of really critical and sensitive information, and that's we have that in mind when we develop regulation with regards to those data sharing, which is different to data portability, which GDPR in Europe address.
Can I just jump in on that one as well? And it plays back to John's question right back at the start around the open finance piece. One of the really good things about having the requirement to share data in regulation as banks is that ties into data protection quite nicely. So we don't have to make the customer sign a new contract or anything in order to share their data. It's a right they have. We have to give them that right and that capability. Whereas if it's not in regulation, so say for example, the FCA decided they wanted us all to open loan books up to APIs, without regulation behind that, it becomes massively more difficult for banks, not technically, but from a regulatory point of view to do that. So it's been good on both sides having that regulation in place. And I think that's what's needed really, not just to push us to do it, but to give us an easy right for customers to be able to do it and share their data.
There's a really interesting question, very topical, from Sasha Ponce, who asks, are AI algorithms, especially for lending, not obsolete with COVID-19 consumer behaviours, obviously with the idea that we're all being financially hit and therefore there's a mass, I guess, payment holidays and deferrals and defaults and all sorts of things. Hugh, perhaps if I go to you for this one.
Again, quite a broad question. I think we have to look at COVID-19 as a bit of a black swan event compared to, decades of trends and analysis and normal consumer behavior that have actually been gathered into algorithms. So there's probably a stronger argument for saying suspend at the moment. And I think that's what certainly the Western governments have done, is essentially suspend their normal behavior, pump money into the economy, which goes against almost everything except what Keynes would say. In a deflationary time, it is not a normal time. It is a black swan event. So governments are pumping money in, they're pumping money through the banks. The banks themselves are pushing everything towards the C-bills and B-bills to get the funding allocated. I was talking to a friend in Lloyd's last night who said we just have a task to get lots and lots of people in to approve these things to get them out. It's not normal behavior. It's not necessarily that algorithms are inappropriate or out of date. It's just a suspension for a period of time. I think Sabanger mentioned that as well earlier on, that they're also ramping up their use of credit checking APIs. We're all moving in a certain way to address this particular problem.
Thanks, Hugh. So there's an interesting question about consumer education. I know we've discussed it a little bit, but interestingly enough, I've got a friend who's worked for a bank for a number of years, and she said to me, with regards to open banking, we've spent years and years telling people not to share their financial data, and now we're asking them to do it at the drop of the hat. There's a big piece there around sort of consumer education and helping them see the benefits of this. Vikas has asked, do consumers realise the implications of sharing such key financial information, and do we need a societal discussion and awareness on this issue? Perhaps if I can go to you on Hugo.
Oh yeah, absolutely. And briefly on customers' awareness, I think we're getting there, but I think it's quite low. And there were some studies recently saying no more than 18% of consumers knew about open banking. But does it really matter? I'm not sure. What really matters is we deliver some new services that really changes people behaviors and really help consumers. And whether it's open banking or not open banking, it doesn't really necessarily matter for consumers, in a way that we don't need to know how contactless payment works. What it matters is that it delivers new services. So on the consumer space, I think we need to prove the value and deliver good value to consumers. Going back to Chris's point, it's not just a compliance exercise. Open banking is a great framework, and we've got to build on that and deliver some great proposals to consumers. And what was the first question, Ayana?
And do we need? Do consumers understand the implications of sharing their data?
And I think, yeah, it's really critical that there's two pieces in terms of education. Is to I think we will get there by proving the value of open banking. That's why open banking will take off. And obviously, trust is a key issue. And all stakeholders, with regulators on PSD2, on CMA order, on banks, on fintech, on OPI, have done a great amount of work to make sure we develop standards and regulations that puts trust and security at the heart of open banking and data sharing. For example, banning screen scrapping and going with API, which is as secure as online banking. So really, in terms of the security, we've got a good amount of security. And to be fair, yesterday I did an event on fraud, and people are still sharing a lot of data on Twitter, on social media, online. So what we need to make sure is to the API is the right way to go, and it's as secure as online banking and more secure than sharing a NI number on a Twitter account of HMRC.
I couldn't have put it better myself. Thank you, Hugo. We've had an interesting question from Masood, who asked what technology enablements to consider for open banking outside the EU. It's not been used much, and how can it be started? And I wondered, Shubhanga, if I might come to you for that one, because I know that Oak North does a lot of work outside of the EU.
Absolutely. In fact, I think the concept of open banking is kind of going beyond the EU now, and even in fact over the last 2-3 years during my stay in India, we started kind of talking about how initially the payments itself was democratized, and then you talk about how do you democratize the data on top of it. And on the other side, from a platform point of view, on the OpenNorth platform point of view, we are actually working with a lot of banks in the American and Australian and Singapore geographies, where I think the advantages of having something regulated as open banking is really kind of going to help in making sure that the use case that the banks are looking to solve are more kind of broad-based, in the sense, if there are only 4 or 5 banks in the geography who are actually kind of going the open API way, and then there are 20 other banks which have not really kind of taken cognizance of this, then the entire exercise may not necessarily result in the desired outputs. So consequently, we are in fact working very closely with the biggest banks in the US as well as in Australia and Singapore, where the banks are pushing the regulators to actually kind of think of making this a norm rather than a good to have feature. So it's a longer way to go, I would say, in some of the other geographies, but there are definitely steps in the right direction that
just to come in on top of that, then there's a difference in push versus pull depending on the geography. So if you look at Hong Kong, China, you've got the likes of WeChat that are using all of HSBC's payments APIs already for international payments, for finance, etc. So there's a pull from consumers, there's a pull from the tech suppliers there to effectively use the rails of APIs or the rails of open banking to provide services. In other places, it'll be the regulators that will drive the momentum and put in place the effective regulation, which is what we've seen here. Once the rails are in place in any country, though, that's where every fintech and every TPP has an opportunity to use the exact same rails. We drive different types of trains on them, but the rails are the same. Yeah.
Absolutely. Back to you, Anna.
Thank you, Shubhanga. So I've had an interesting question from Sasha again, who asks, if open banking is driven by the market, what would be the main drivers that incumbent banks could leverage to make money out of it? Obviously, I'm not going to ask anyone to discuss commercial secrets, but maybe, Chris, if you could give us a reason as to why Virgin has taken a real hard look at this and is invested in open banking in this way.
Yeah, and I think we're still at the start of the journey. I mean, one of the key things that we're looking at is the enablement of partnerships to be done much more quickly and much more cheaply. In the old world, obviously, you would go out, you'd find a partner for a particular interesting service you thought your customers might like, and then you've got to throw a load of developers, a load of tech guys at it, a load of testing and everything else to make it work. Our view is that can be drastically reduced. If you have an open API available, you might add a few more services on it for the particular partner over and above what open banking offers. But in reality, all the tech heavy lifting has been done. So I think that's going to be one of the key pieces is enabling quicker partnerships to take place going forward.
Thanks, Chris. And perhaps, leading on from that question, there's an interesting question from Sharias, who asks, how do banks perceive the open banking initiative, as this will potentially mean customer churn and increased competition? I think from the regulator's perspective, competition is a good thing. But I mean, there's a real question, isn't there, about is there enough space for everyone to be playing on this field? I mean, perhaps Hugh, if I can go to you for this one, and then anyone else feel free to jump in.
Yeah, I in my time over the last 5 years, I've not heard many people in HSBC ever saying this is terrible. So it's been embraced. As Chris says, this is a great opportunity to expand what the organization was doing itself to itself. It was already developing its own microservices climate, you know, its own architecture that allows for a services-driven, API-driven internal structure. What we're able to do is piggyback on top of agreed infrastructure, standards and protocols that are all the same across the industry, to look at where do we start to bring in some more powerful collaborations. I think I mentioned that one earlier on. I had, I suppose another example, I use N26 in Berlin. They use a company called Forcefield as their risk and onboarding supplier in the UK. These guys are effectively orchestrating banking services together. Neither of them necessarily will become, well, N26 might become a bit of a world beater, but they are orchestrating their expertise together to develop something that is a new outcome, a new orchestrated service. And I think a lot of the banks are looking at this in exactly the same way, that this is an opportunity to enhance what we do ourselves with suppliers, with partners, and understand that we're all speaking the same language, the APIs are the same technology, etc. And this presents opportunities. I mean, just this week, one more opportunity, or one more example I'd use is that in Hong Kong, there's a business foundation platform called Nova. Just this week, they've rolled out the standard HSBC Business Bank account opening API within that structure. So you go one point of call, and you effectively have a end-to-end journey put in place to set up your business in Hong Kong. And that then will also use further orchestration of further services to ensure, you know, the corporate checkings, all of the KYC, all of the stuff in the background. So I think it is a positive outcome. That's what we're looking at.
Thank you, Hugh. That leads nicely to a really interesting question that we've had in from Tony, who says, open APIs brings the day when banks become a financial services utility that no longer has a primary control influence of the customer's relationship. Agree or disagree? And I think this is a really interesting question because it plays into the wider question of the role of data and who owns data and customer ownership of that. And there is some interesting stuff happening. I know that the Bank of England is, for example, looking at the SME credit file and how data can move with businesses rather than with institutions. So perhaps if I can go to you for that one, Hugo, and then others, I think, feel free to jump in because it's a big question.
Yeah, thank you. We don't necessarily know. It depends how where market go on. The customers ultimately will decide if they prefer to have the relationship with the banks they have, or with a couple of banks they have, or if they want to use a couple of different fintechs for either some specific part of financial services, or potentially we could see a future where for some consumers one or two fintech will be the way they interact with financial services, but behind you'll have a variety of banks behind that. And at the moment, we've not seen anywhere where bank disappeared, and it's very likely that banks will have still fundamental roles. And obviously, financial services, as I said earlier, with open data and open banking initiatives, we're dealing with incredibly important information and services, and it's really critical that we make sure it's all safe and secure, and we get best advice to consumers. And that's why banks are heavily regulated and working on digital currencies, and that's why we're seeing it's really hard to get new digital currencies, private-led digital currencies approved, because we want to make sure it's secure, and there are a lot of bench of regulation around KYC, AML, etc. So I think definitely banks will keep playing a major role. And then what's interesting is to see what consumers and customers will do with open banking on the agility they want to have. And definitely it's up to consumers to decide which way they want to go. And as I said, we'll probably see a future where some people will interact with fintech, but behind we'll see banks beyond that, and some will will have a relationship directly with the banks, but definitely we're gonna see consumers being in better control of the services they get and who they interact with.
Yeah, I think the critical point that Hugo makes is that element of trust. And if you've got a current regulation structure that is set up to manage and regulate a bank, you know, essentially a monolith, it's still for a long period of time going to be the engagement point, unless regulators start to evolve to regulating the full suite of offerings. You're effectively saying the trust sits with the bank, and the bank offers a marketplace of services. Hence the need to collaborate with fintechs to ensure that fintechs are not squashed out of the market, but actually become an integral part of that marketplace. And you know, as per Hugo as well, that will evolve. That will evolve, and consumers will decide what's most convenient for them. Does their first port of call become the fintech that then provides the marketplace of services afterwards? I think in a lot of cases that will evolve, and that will become the case. But in the short term, it's going to be about the trust element and the regulation element, and that sits at the bank level at the moment.
And if I may just add, you know, it's interesting, right? And at least in the Indian fintech circles, I've been hearing this about the relevance of banking and will banks can kind of sustain. I think it's important to recognize that that while fintechs are definitely providing you know, values in very specific verticals, I think what banks do, or global banks are doing, you know, it's really, I think, to borrow his words, it's a marketplace of services, right? So it's a lot of things that they're already doing, which are not going away in a hurry. So consequently, I think I just saw on the chat somebody kind of pointing it as influence is equal to profit. So I think banks are also managed by some incredibly smart people. So they are consequently kind of learning from the market and evolving. And we're only seeing banks thriving on the back of open banking, plus how they work with fintechs, rather than you know, going into oblivion in any hurry.
Thank you, Shubhanga. I think that's a very salient point to end on. Banks shouldn't worry. As long as they continue to innovate and work with fintechs, then hopefully they'll continue and they'll acquire customers in much the same way as they have done. I think I'm going to close it there. I think we've sort of run out of time, but thank you everyone for your questions. I will hand back over to Mark now.
Thanks very much, Ayana. Okay, so that concludes today's FinTechs Friday discussion. A special thanks to Ayana, to Chris, to Hugh, to Hugo and Shubhanga for their time and insight this morning. Thanks also to everyone who tuned in and participated. We have a short 5-question survey about future formats we'd really appreciate you complete at the end of this webinar. We will be back here in 2 weeks on the 29th of May to discuss the impact of AI on financial services. We hope you'll join us again then. From myself, our expert panelists and the team here at Next in Tech, enjoy the rest of your Friday and have a great weekend. Thanks very much.